Greetings and welcome to the lesson titled Collection, Recovery and Refund of Taxes in Kenya under the topic Administration of Income Tax and Procedures. The subject is Public Finance and Taxation. These are three things: collection, recovery, and refund. Let's begin with collection. Collection of taxes. Now, before we get to the collection of taxes, it's important to note that the processes for the collection, recovery of unpaid taxes, and refund of overpaid taxes in Kenya are primarily governed by the Tax Procedures Act, alongside with specific provisions in the various taxes like the Income Tax Act and the VAT Act. Okay, so the collection of taxes here in Kenya, we know, is the standard process by which the Kenya Revenue Authority receives taxes due from taxpayers. And the methods of collection vary depending on the type of tax and the taxpayer's circumstances. One method of collecting taxes in Kenya by KRA is direct payment by the taxpayers. One, direct payment by taxpayers. Direct payment by taxpayers. This is the most common method, particularly under the self-assessment system. Taxpayers calculate their tax liability, they file their returns electronically, then generate payment slips and make payments through designated banks or mobile money platforms by specified due dates. For example, it could be 30th June for individual income tax, or 20th of the following month for VAT and PAYE, and so on. So that is one way. Direct payment by the taxpayer under the self-assessment system. Then we have withholding tax, withholding taxes. Now, this is a method of collecting tax at source. The payers of certain types of income, for example, employment income, rent, dividend, interest, professional fees, are required to deduct tax at prescribed rates when making payments and remit the withheld tax to the KRA on behalf of the recipient. So there are certain incomes before they are received by the recipients. They, once paying, withhold certain amounts and then remit to the Kenya Revenue Authority. Payers of certain types of income, payers of type of income, payers of salaries, that is employment. Those who are paying salaries are employers, okay? Payers of rent, dividends, and so on are required to deduct tax at prescribed rates when making payments and remit the withheld tax to KRA on behalf of the recipient. That's the second method KRA collects tax. Then number 3, installment tax. Installment tax. Now, this is applicable mainly to individuals and companies whose income tax liability for a year exceeds a certain threshold, and currently it's around 40,000 Kenya shillings. So taxpayers are required to estimate their tax liability for the year and pay it in installments throughout the year, with the balance paid by the annual return due date. 4, advance tax. advance tax. Now, this is primarily applicable to owners of public services vehicles and commercial vehicles. This tax is paid in advance before obtaining or renewing a vehicle's license. So these are 4 key ways in which KRA collects tax. That is collection, recovery of taxes in Kenya. Recovery of taxes. Now, when a taxpayer fails to pay taxes by the due date, KRA has various legal mechanisms under the Tax Procedures Act to recover the unpaid amounts. And tax becomes a debt due to the state upon becoming payable. Okay, so KRA has what we call debt recovery process, which begins with the demand notices. If payment or engagement from the taxpayer is not forthcoming, KRA can resort to enforcement measures, which include agency notices. Agency notices. Number 1, agency notices. KRA can issue a notice to a third party who holds money for or owes money to the taxpayer. For example, banks, employers, debtors, requiring them to pay the outstanding tax directly from the funds. So if I owe KRA taxes, I've not paid taxes, but I'm holding money in a bank, KRA can write directly to the bank and request the bank to pay that amount on my behalf. That's referred to as agency notes. KRA can issue notice to a third party who holds money for or owes money to the taxpayer. Examples are employers, debtors, banks, and so on. Number 2, distress for rent. Distress for rent. Distress for rent. Okay. KRA can seize and sell the movable property of a taxpayer who has failed to pay tax after a demand notice. Okay. Remember, we say that KRA can issue demand notice to the individuals or companies that have defaulted, and if the taxpayer does not pay within the stipulated time in the demand notice, then there could be distress for rent. Distress for rent. KRA can seize and sell the movable property of a taxpayer who has failed to pay tax after demand notice. 3, recovery by suit. Recovery by suit. Recovery by suit. Now, KRA can initiate legal proceedings in court to recover unpaid tax as a civil debt. Okay. 4, security for unpaid debt. For unpaid, security for unpaid debt. What does that mean? Security for unpaid tax or debt. KRA can seek to register a charge or security on the taxpayer's property to secure the outstanding tax debt. Security for unpaid tax. For unpaid tax. Security for unpaid tax. Okay. KRA can seek to charge the property of a taxpayer so that it can recover money from that security. Security for unpaid tax. 5, preservation of funds. Now, candidates, we are trying to list the ways in which KRA can recover money from a taxpayer who has failed to pay tax. So number 5 is preservation of funds. Preservation of funds. Now, in certain circumstances, KRA can take steps to prevent a taxpayer from dissipating funds or assets that could be used to settle tax debts. Okay? Then departure, let me write the 6th point here, which is departure prohibition order. Departure prohibition order. KRA can issue an order prohibiting a taxpayer from leaving Kenya if there are reasonable grounds to believe they may not return and the collection of taxes is at risk. 7. Insolvency and liquidation. Insolvency and liquidation. In cases of bankruptcy or winding up of a company, KRA's tax claims have a certain priority among the creditors. So if one is bankrupt and the assets are being liquidated, then the KRA may have priority over other liquidators. 8. Seizure and forfeiture. Seizure and forfeiture of goods. Seizure and forfeiture of goods. Seizure and forfeiture of goods. Now, this is applicable particularly in customs and excise matters where goods related to tax violations can be seized and forfeited. So these are 8 ways in which KRA can recover unpaid taxes from the taxpayers. Refund of taxes. Refund. Let's study refund. Now, a taxpayer may find themselves in a position where they have overpaid tax or paid tax in error. The Tax Procedures Act provides a process for claiming a refund. Okay, the law provides a process for claiming a refund. And what are the circumstances for refund? Circumstances. First of all, what are the circumstances for refund? The first one is excess pay deductions. Circumstances here we are referring to overpayment can arise due to various reasons. By circumstances, we are asking the question, what are the reasons that can lead to overpayment? One is excess pay deduction. Excess pay deductions by an employer. 2, entitlement to reliefs. Entitlement to reliefs like mortgage interest or insurance premiums not fully accounted for through PAYE. Overpayment of installment. Overpayment of installment tax. Overpayment of installment tax. Overpayment of installment or even advance tax. 3 or 4 is excess input VAT. Excess input VAT over output VAT. Excess input VAT over output VAT, particularly for businesses making zero-rated supplies. 5. Tax paid in error. Tax paid in error can lead to where can lead to overpayment of tax paid in error. Okay, so that is very important to note under refund. These are the circumstances that can lead to overpayment of tax. Then we have the application process. What is the process for applying for refund? What is the application process? What is the process? Now, a taxpayer must apply to the Commissioner for a refund in the prescribed form, usually via iTax portal. This is done via iTax portal. It can be done via iTax portal. The application must be supported by relevant documentation proving the overpayment. That is the process. Then it's important under refund to make mention of the timeline for application. Timeline for application. Are there limits? Time limits. Now, the general timeline for applying for a refund of overpaid tax under the Tax Procedures Act is 5 years. If you have overpaid and you do not claim within 5 years, then forget about it. Okay, that is the general timeline. However, specific tax laws may have different periods. For example, there might be shorter periods for certain VAT refunds. Okay, so after the application is made for refund, the Commissioner is required to consider the refund application and make a decision within 90 days. Okay, KRA processing has to be done. KRA processing done within 90 days. Within 90 days. It has to be done within 90 days of receiving a valid application. And KRA may conduct an audit or review to verify the claim. Number 5, candidates, we are studying the procedure for seeking refund of overpaid taxes. Number 5 is processing of approval refunds. Processing approval refund. Processing of approved funds. Processing of approved funds. Now, if a refund claim is approved, KRA will first apply the overpaid amount, to offset any other outstanding tax debt the taxpayer may have under the same tax law or any other tax law. So if you have successfully applied for a refund and KRA has approved that you ought to pay to be refunded 100,000 Kenya shillings. Before the 100,000 is paid to you, KRA has to check if you have any debt, if you have any outstanding tax debt, so that this 100,000 may be used to offset that debt. And any remaining balance is then refunded to the taxpayer. Are there any timeline for refund payment? Timeline? Is there any timeline for refund payment? Is there any timeline for refund payment? Yes, KRA is required to refund the approved amount after offsetting any debts to the taxpayer within a specified period, usually within 2 years from the date of the refund application. Failure by KRA to refund within the stipulated time may attract interest. Okay, so the Tax Procedures Act, just as I said at the beginning, that the processes for collection of taxes, for recovery of taxes, and refund of unpaid, overpaid taxes in Kenya is primarily governed by the Tax Procedures Act, which provides a structured approach in managing tax collections, enforcing payment where necessary, and even facilitating refund of taxes when taxpayers have overpaid. That's all for the lesson: collection, recovery, and refund of taxes. Bye.